Uh-huh.
Yeah. So, okay. Okay. Yeah. Okay.
All right. So good. So thanks everyone for joining. We basically going to go over our class on trading and basically our strategy as far as how we trade and how we're going to trade moving forward and the type of trading we do. We're going to kind of condense this training period into a smaller introduction, because normally I go through this PowerPoint that we have here, and it kind of explains the history of the blockchain, cryptocurrencies, and then we also, we want to develop a strong foundation for when we teach our training class, and we kind of go over what is money, how is the blockchain different than cryptocurrency, and then also what is cryptocurrency in the future. So, really, I'm gonna kind of skip over that part of the training part and get right into the curriculum of, basically the type of trading that we're gonna do, and basically what is the VOO strategy, and what is our strategy in trading. And so, to condense this down, we're gonna skip this part of the presentation and get right down into, what is our overview on trading and how we use the stock market and institutional trading techniques to basically profit with crypto. And at any time, I don't know if you guys are watching, just let me know in the comments if you have any questions, and this way I can address those as we're going here. So this comment bar here is an area that you guys can go into. So, to give you an overview, everyone here is familiar with the cryptocurrency, and, based on the blockchain, blockchain is technology and the cryptocurrency is an asset. So, really overall, the technology that runs the cryptocurrency is going to be around. It's going to be here. It's almost like the equivalent of saying that you have the internet and then you have assets like Facebook, like CNN that runs on the internet. The internet technology, it pretty much changed the entire world. And when we look at the blockchain, we're looking really at a new database. And, the new database is a way we store information, and that's over the blockchain. The blockchain, just to give you a brief overview, you had mainframe systems, and we've had, mainframe systems lasted for about 30 to 40 years, 50 years, and then we moved into a relational database, which was like Oracle, Access, different places to store data across multiple databases. Now we're moving into a blockchain that basically is a kind of a database that runs over the internet, and the information can be stored everywhere, and there's confirmations that happen on that information. So almost the amount of information that you have on a blockchain can be unlimited. And so cryptocurrency is really a new form of money. You have US dollar, which is a currency. You have yen, that's a currency. You have pesos. You have all these different countries that has, its form of currency. This is the first currency that isn't backed by a government and wasn't created by a government. So, we're introducing a world currency, cryptocurrency, and we'll just use Bitcoin as the primary currency that we're going to be talking about. All right. And so we're going to use Bitcoin as the currency that we're going to just talk about as far as on the crypto side. The thing about a world currency is this one Bitcoin, no matter where it's at in the world, is going to be one Bitcoin. And, there's two things that start in the beginning of time. You have land and you've had trade. We've had trade through the, barter system, where basically you had people from, one region, just say, for instance, Africa. You had, a person from China. They would meet and they would barter. They would basically say, hey, give me this and I'll give you this in return. And that was that's a form of trading. Right now with cryptocurrency, different areas, Bitcoin is they have different values, and it's based on supply and demand, right? So you have Bitcoin in America on an exchange, it could be 4,000 right now. You have Bitcoin in Canada, it could be 4,200. You have Bitcoin in Tanzania or Zimbabwe, it could be 20,000. So based on the market, it could change prices. The good thing about cryptocurrency and the good thing about Bitcoin is there's a limited amount of Bitcoin. You have 21 million that's ever going to be created. That 21 million, once it's created, there's not going to be any new supply. So that means that the demand for cryptocurrency and Bitcoin, it has an unlimited upside. And this makes the case for long-term investing. For us, let me get down here. Our trading strategy is going to be day trading and swing trading. The difference between long-term investing, swing trading, and day trading. Long-term investing, you buy over a period of time, normally a year, 2, 3, 4 years. You just continue to buy and hold, and that's a long-term investment. Day trading is trading within 24-hour period. You buy something with the hopes to profit within that 24-hour period. Swing trading is really what institutions do most of the time, and it's a period from 1 to 21 days normally. And it could be 2-3 months if that was their defined period. Our defined period of swing trading is going to be from 1 to 21 days. Our defined style of day trading is within 24 hours to buy and sell. With that, we're basically going to explain our VOO trading strategy, which is can be used over a day trade or a swing trade, and it basically stands for volume over orders. And basically it's a volume trading strategy. The alligator trading strategy, moving averages over a period of time, and it's really defined for swing trading. So going through, this is what the alligator looks like. We'll start with the swing because we can apply the VOO to both day trading and swing trading, and it's based on volume. So there's 4 things that you need no matter what you trade. And our strategy, it can work on Forex, it can work on stocks, it can work on cryptocurrency, futures. And no matter what type of trading you're doing, you will have 4 things. You'll have price, you will have a candlestick, you'll have volume, and you'll have a chart. And so the strategy that we focus on, or we want to teach, is basically based on those 4 things. And in this way, it can apply to any aspect that there is. And so looking at this chart here, which is the alligator strategy, you'll see that we have an arrow here, we have an arrow here, and that you can consider that resistance and support. And these bars here, you look at, these are volume. This red, this green, these are candlesticks, and this overall thing is a chart. When you look at an alligator, and the reason why we call it the alligator strategy is because when an alligator is going underwater, normally it's in a death row spiral, it's trying to drown out its victim. When you see an arrow pointing down, it's basically meaning that the price is going down. And we never really know how far it's going to go down. You can't predict how far that alligator is going to go down, once it goes underwater. When an alligator comes up out of water, it's normally either stalking or it's going to be eating. And when we see our alligator hits the bottom and it starts coming up, and you see this green arrow, it's basically meaning the price is going up. So we always want to be in a trade when the alligator is going to eat or when the price is going up. We want to exit a trade when we see that the alligator is going underwater. We never know how low it's going to go, and you don't want to be caught in a death row spiral. So our way of teaching is really, we want to make it simple. There's a lot of complex strategies out there with different strategies everyone uses. This is our strategies is going to be for everyone to be able to use. Okay, and so before I get too far into alligator strategy, I want to explain what this volume and the 7-day moving average. And we're going to go more on the charts. And then the next thing we're going to talk about is the volume over orders, which is the VOO strategy. We can use it support and resistance. You have a past history of price, and then we also going to have the volume. Now, institutional trading, banks and the stock market, it has a history. Institutional traders, they kind of follow the same patterns. If we look at human nature, normally humans, they'll be up between 6 in the morning and they go to sleep sometime at 10 or 11 at night. That's normal, right? That's something that happens every day in, day out. During the night, people normally sleep. Well, trading is a global market, and we have bankers, we have financial institutions. We have, no matter in the global economy, bankers is kind of like creatures of habit. They're going to buy and sell and get in and out of open and closed markets at the same time. They move money in and out the market similarly. So in crypto, there's a market cap of about 136 billion today. 136 billion is the market cap for the entire crypto market. For the stock market, the amount of money that's moved on the stock market is about 15 trillion a day. It's a huge difference. There's not a lot compared to the stock market. There's not a lot of money being put in crypto compared to the stock market being moved. And when on the stock market, there's 16,000 stocks traded daily. In cryptocurrency, there's a top 100. So what that top 100 means is, if a bank is buying into crypto, all we need is the volume to see what they're doing. We can watch this coin market cap. If it goes down, we know that money is coming out the market. If it goes in, we know money. It goes up, we know money's coming in. Money comes in, prices goes up for the top 10, top 20 coins for sure. Money comes out, price goes down. So on an individual level, if you can actually track volume, there's no way a bank or institutions can move 2, 3, 4 billion into crypto without it being identified. So with that saying, volume over order, our strategy is to basically track the volume. There's no other indicators that we need to know. We need to know buyers and sellers. And using our strategy, we can tell that there's buyers on the right side and there's sellers on the left. These are the orders that's going placed in. This is actually what's happening real time. On this chart right now, we're using 15 minutes. But if we were able to go down to 1 hour, we can see how many orders is placed in the hour. If we go down to the day, we'll see how many orders are being placed in on the day, and you can use that for support and resistance. So the X's that you see on my chart on the VOO strategy, this X here, this is where buyers have stopped buying. This X here is where sellers have stopped selling. This candlestick here is what's happening right now and how many sellers, how many buyers. So if we look at this here and look at 39.90, we can tell that we have 76,000 buyers on the right side. On the left side, we say 70,000 sellers. So just using simple, like a scale system, if you have more buyers on one side, you have more support. If you have less sellers, you have less selling and more buying. The price should either hold or goes up. If you look at up below at 39.40 or 39.50, you have 66,000 sellers. You have 64,000 buyers. So just using that, if the price gets down and it gets down to 39.50, you have more sellers than buyers. And this is actually in real time. So the number is constantly changing, but these orders are already set. So when they're kind of similar, you can say, hey, it only needs a little bit of buyers, a little bit of sellers to tip the scales. But when you come down here and it's 42,000 buyers and 39,000 sellers, you know you have more strength. And you go down and you continue to go down, and you can find where there is a larger variance of buyer and supports. The time frames that we use, if you're going to be day trading, is going to be 15 minutes to like an hour, right? If you're swing trading, you know, you're looking at the days. And then we're also going to look at the alligator. We look at these arrows here. So on a day trade, we know that this has been, the alligator is coming out and there's strength, and this trend is up. So on a day period, if you're swing trading, this gives us confidence to stay in. Now there's buyers and sellers every day, and you know throughout the day, sellers are going to take over, and buyers are going to come back and take over. We can use this volume, we can use the orders to determine what is support and resistance. We can also see on a bigger time frame where the major support was, and we can also show where the buyer stopped buying. So if a buyer stopped buying, you know, we should expect a dip. Sellers stop selling, we should expect a uptrend. This makes it really simple to actually trade, you know, on a shorter time frame. You know, we see here on a short time frame, we see sellers stop selling here, buyers stop buying here, and this is the range you have for the day and within hours. So, you know, just looking at the Bitcoin right now, if we're on Binance, we're looking at 39.90 and we're looking at 39.40. So that draws out support and resistance just between these two X's in this immediate time frame. Now, as you see, you can see an X, you know, appearing in real time. And that's just telling you that sellers is stopped selling, because right here, you know, we're looking at the volume and it's really close. So you're going to look for a larger area where more buyers and sellers. And so we go down here to 39.40, and we clearly can see that there's 933 buyers. There's only 731 sellers. So this would be a level of support. And this would, you know, you would use this on a day trade. Now there's also another aspect using the alligator strategy. So combining the two to actually see a swing, it allows you to get into a trade and stay into a little bit longer. And this is, you know, the alligator. So when it says you can't find where the bottom, you know, here is the bottom, and we're looking at Ethereum. Let me go to Bitcoin. So, you know, we can look here at knowing that this is where the alligator came out the water. And this period of time on a swing trade, it's still been moving up. Even though you have ups and downs, you have your support and you have your resistance, you will always know where you're at in the trade. If you can let me know about people who are commenting, so I can, if you can see the dashboard, if people are commenting inside the dashboard. So, okay. So with that, you know, there's things that change throughout the day. You know, you'll have news.
They can now see what you are pointing at.
Okay. Okay. All right. So.
That's from Bob. You can now see what you are pointing at.
Okay. So they only see one screen. Yeah. Okay. Yeah. All right. So they just don't see the pointer. Okay. So they just don't see the pointer on screen. All right. So on the right side, yeah, they can't see my mouse. Okay. All right. So yeah, what I was pointing at was the green on the volume to the right. So we're looking at the Bitcoin chart, and there's there's numbers on that right side. So if you're looking at you have a long purple, and there's a green line that goes right between. There's volume right there. The 413K and the 400.16K, those are buyers and sellers. The buyers are on the right. And let me know if you comment in the box if you see what I'm talking about, where there's a green line going through this chart. Okay, right. So on the right side, those are buyers. Left side, there's the sellers. So you have your bid and your ask. This is what we're using on a time frame. This is a 1 hour chart, and it shows you how many orders are being placed on a 1 hour. If you go down two from that 4.13, and you go down to 2.185, and then the next one is down is at 933. That 933 is 933 buyers. That 731 is the amount of sale orders. So it just shows you strength. The volume of the orders is telling you that there's 933 more buys than sales. And it doesn't give you the actual, sale order specifically, but we can actually break that down by going to a smaller time frame. So if I choose this and go down to the 15-minute, it actually even breaks it down even more. And so now I'm looking at the orders on a smaller scale, micro. So the time frames that we zoom down to, it gives you the orders, and this will allows you to stay in the trade or get out of the trade. When we see more sellers and we see the resistance, we can feel more confident to get out of a trade, knowing that, hey, this resistance is pretty strong. We see a lot more sell orders on the sell side. So even at that period of time, we can know that we can sell at the top, and then we say, hey, we're going to buy back down where we see the strength of the buyers. And, today it's been a low volume day. There's not a lot of activity. The range has been short. So we see that the, resistance is at 39.80, and we see that the support, there's, support on a smaller time frame at 39.40. And so just knowing that, we can feel confident until we see more buy orders come in. And this is, using day trading, but overall the day trading and swing trading can be used overall. If we look at the day chart, and we still know that we're still in an uptrend. We're still in strength. Just looking at the orders. And so this would keep us in the trade longer if we're not actually day trading and we're doing a swing trade, which, that's going to be majority of our trading, because we know that it takes banks between 1 and 3 days to actually exit large positions. They're not going to dump 5 or 10 billion overnight. If it does, then it'll give a long candlestick, and that'll be a sign to exit. So in conjunction with this, we're looking at volume, and then we're looking at the overall market value. As long as this is over 136, for the day, then we know that, no matter what, the buy and sales that's coming in, these red candlesticks, they're just normal, jitters throughout the day. It's going to go up and down. We're looking at major volume, which is, the market cap, to kind of give us our gauge if, institutions are leaving. Because at the end of the day, we're not concerned with retail up and down. We're concerned with large institution traders going in and out the market. And so we like to, consider us, there's big waves and there's small waves. We're not concerned with the ripples. We consider that noise. We're concerned with the big waves. The big waves wash the little waves away, which are retail guys, and we want to follow the institution money. So, our strategy with the volume, the VOO strategy, is to basically follow, the institutional trading. And then we also, can plan out the month in advance. So there's some, we'll just give you a kind of example of what we sent out this month to guys in our group. So, we sent out we have a better report. It doesn't come out like this, but, this report basically gives a stock market overview, and stock market and crypto is different, but the way institutions move their money is going to be the same. Cryptocurrency is becoming, this year we're going to consider this kind of like a mass adoption year. It's a year of regulation, and there's a conversion going over where things are starting to switch. This is the first time historically where we moved into January where stock market has actually been down and crypto has, seen money come in. And, throughout the beginning of the month, we start seeing a switch where institutions start, kind of playing with the crypto market, putting money in, and the stock market, it was actually going down. So using historically, what comes in and what happens in the stock market, we're able to kind of relay that to each individual day in crypto of when we should see money come in and out. And so, yesterday, which was the 8th, we, before the month was even up, we were prepared to sell and take profits. And we can see the day is a slow day. And then we have on the 10th, historically a bullish day where money comes in to the stock market. We can actually use that to gauge when money comes into the crypto. So, one thing is, we use a stock trader's almanac. And this gives you a barometer of what happens historically in the stock market. And these bulls kind of show that over 60% of the time, money has come in to the market. And like I say, 15 trillion is traded daily on the stock market. Only 130 billion is traded in crypto. We can tell a 2 billion, 4 billion increase in crypto makes the price go up 5 and 10%. So we don't need to, track 10, 20, $5 trillion like on the stock market. We can see small movements of 2, 3, 4 billion come into crypto and we can take profits. We can also see money coming out and we can actually get out before a loss is assumed in crypto. So, we have an advantage trading crypto. It takes 28 days in the stock market to get 1 day of volatility in crypto. That means that there is a huge upside in trading crypto over the stock market. Catching a 5 and 10% run, it's a lot easier in crypto. We had, TRX last night. You had Dash, you had ADA. These are all currencies that moved over 5%. If you can make 1% a day trading, you can take a. Okay, this is yeah. So with that said, would you not? We're reading actually. Hey Bob, we're reading what you're putting out there. So on ADA and TRX, moving 5%, 10% a day, it gives us opportunity in crypto. That makes it really an advantage to trading crypto. A 1% a day growth on $1,000 will have you at 1.5 million in 18 months with just using compound interest. So the ability to find a 3%, 5%, 10% move in crypto is a lot easier than actually doing it in the stock market where you have 16,000 options, 15 trillion traded. We're able to track this a lot easier in crypto. Okay. So with that said, the indicators that we have in the VOO, just be able to catch and knowing when to exit, we have an advantage with this script. And you can see here that there's no other indicators. There's no waves. This identifies the alligator coming out the water. This identifies support and resistance. And this gives us our edge in trading just with these indicators in this one screen. And it makes it simple where we can actually duplicate and actually teach this to other people how to get in and out of a trade if they want a day trade. They want a swing trade, based on just the 2 swing plays that I gave, in the beginning of the month, the safest trades, we can actually back up and know, BNB and Ethereum was a trade that we gave before January started. Just for those 2 trades alone, the gains were over 10% on both sides. So you didn't have to make a lot of trades. And then also using a calendar, we're able to, get into the safest trades and take, 5 to 15%. So for BNB was a buy, because we knew on January 19th they had a coin burn. So just the confirmation of a coin burn January 19th, getting in January 1st, we're able to see profits. Go here to just to give you the kind of our entry points. So if we look at January 1st. Just say we actually got in BNB at 5. Okay. Yeah, we got it at 5, but just looking at the growth, even if you got in late and you basically seen BNB, it went from 5.59, and it touched $7 already, but our arrow is still telling us to stay in the trade. And we know that we have a date on January 9th, so we can ride that news. Same thing for Ethereum with the 2 forks coming up. So, our focus is not trading excessively and day trading. It's getting in the right trades and having a day or two to allow them to grow, or even, our swing trade is from 1 day to 21 days. So, seeing that, we got into, even say we got into January 1st, even though we were in Ethereum a lot earlier. At 127, and is at 148 right now, that still is a greater than 10%. So, actually finding in, if getting in when the alligator started, where we had his first arrow at 90.
Work better.
Did it work? Huh?
No, the Zoom works better.
Oh, it
than
works
this.
better. Yeah. So, even getting there, at 90 to, 160, it's almost a 80% move. So where you have, multiple trades, if you can make 100% or 80% or 50% in a month, and you have an account that's 100,000 and you turn it into 150,000, or you have an account with 50,000 and turn it into 75,000, that was done with 2 trades. No, so we use actually human, manual. There's no matter what system you have, there's no replacement for human. Human and new news. So one of the things on the VOO strategy is momentum trading, news trading, and scalping, and that's something that no chart out there. There's no substitution for human and actually having news come in and having a market psychology. So in our trading, that is why we're going to have prop traders and still is human aspect, because there's no replacement for logical and market psychology and fear. We've been up for 5 days, so say from Friday to Tuesday, that is a 5-day period where everybody's been making money, and bankers is like, how much is enough? When do you take profits? So just using that, having that human aspect of market psychology and doing a daily report. We have a monthly report, and then we'll also have a daily report of what is our daily plan. And so that in conjunction, if I say today is a day trade day, which it is, and then we use the VOO strategy to kind of look at, what we'll day trade.
Can you do for me a favor?
Yeah.
Because they can see us on the camera,
Okay.
right? So if you can point the camera to there and you stand there to point it to
Okay.
there.
Okay. Yeah.
Yeah.
All right.
Yeah.
Okay.
If they,
They can't see it, right?
yeah,
All right.
yeah. So, no.
No, I'll get up there.
Yeah.
We can point that over there.
No, just point the camera.
Right. No. See, I need a point because they can't see the point.
No. He needs to stand
Yeah.
up in front of the TV.
All right. So. So here, knowing that today's a day trade and just having that that guide on a daily basis, we can actually see that here's our day trading where these 2 X's. So just using a VOO strategy and having these 2 X's identified, this would be your, on a 1 hour chart is what we use for day trading. And then this would be our support and resistance. So we would still here where we see our green X, that means the buyers are done. And then we'll buy here where there's X. And that's where they trade. Since this arrow is pointing down, which is our alligator, we know that we're not going to stay in this trade overnight. Because not until we get a up arrow on a day is when we stay in the trade. So this is a day trading, And so now since you guys can see we're up, you see your buyers here. You have more buyers here on this level, which is like 39.60. You have buyers here. So we starting to see that we're starting to build a buying wall, meaning that the price.
They say it's better if you use they actually can see the mouse.
They can see the mouse.
Yeah.
So you're changing, right?
Yeah.
That's what I'm saying. We were good.
Yeah.
If I'm sitting down.
Yeah, sitting down is better.
It's better.
Right. Okay. Got me.
Yeah. We are testing everything.
Right.
Yeah.
Hey, we're testing this right now.
Yes.
So, this is on a good, trade. So you'll have let's go down, it's smaller. You'll have the ideal of buyers and sellers. And so since this number with these are signals that I'll be giving throughout the day and giving updates to basically allow people to, track. So, long as we see this market cap, we know that we're going to stay in the trade on a day, and we had a volume coming in and out. So now we had a volume, we had a buyer, so we have true visibility. So this way, guys aren't guessing when to get out or not getting shaken out of positions on a case by case basis. Because that's how traders lose money. They're unsure. So when you have a choppy day like today, where it's not a lot of volume activity, and you have guys are second guessing emotions. We try to take the emotions out of trading and follow the trends. Follow what we see, and we can see the volume. So having this indicator here, it gives us an edge on both on the swing trade, on the day trading, and the percentage of gains that we're able to capture. This is going to be able, others are going to be able to duplicate. And we're not using any bots. We're using buy and sell signals and, taking profits based on the orders that we're seeing. Because you're not going to get a lot of bots that's going to, be able to determine the psychology of the market. And then also the timing of other markets that are open and closed. So, just looking at this, we know that right now between, 9 a.m. Pacific Standard Time and 11 a.m., a lot of markets are closed, and they'll be getting ready to open in a couple hours, especially for the Asian market, which is a big market for crypto. And then that's why we'll see an increase around 12:30. So, see any questions? Okay,
That's good.
yeah. So
I think that's good for today.
Right.
Everybody.
Right. So, that's kind of a good overview of basically the trading, the volume trading, the templates. So the templates that we use are all in TradingView. This means that you can access these templates, or, we'll be able to trade on any platform. And a good thing about TradingView, for instance, is if, we wanted to look at stocks, it works on all platforms. Stocks, futures, Forex. Let's see. It takes a little bit minute to get it. And so here you see, Apple. You see your resistance. You see your support. And you have your buy orders and your sell orders. And so, just learning the VOO strategy, the volume over orders, it gives you an edge in any market. All right, cool. So, cool. Yeah. So thank you guys for joining in. And, this is, you know, it's kind of an exciting time. If you've been trading and you've been using kind of the charts and you haven't been using volume, you know, this is definitely going to, you know, give you an edge in trade.
Hey, thank you, everybody.
Thank
See you
you.
next time.
Go back to work.
So now we disconnected. I think Danka has a lot of questions.